Welcome to the Lenders Playbook Podcast. Today, we learn about private capital from one of the very best. We have Charlie Farnsworth from 1892 Capital. 1892 Capital Partners, located in the Puget Sound area, is a direct, hard money lender focused on assisting real estate builders, brokers, and investors in securing practical investment strategies and customized real estate loans. My name is Matt Rosen, your host, and this may be a podcast episode you may want to bookmark, save, and share with your friends. So without further ado, let's bring him on. Charlie Farnsworth. Charlie Farnsworth, man, welcome. Great to see you. Yeah, so good to see you on this podcast. I've known you now for a few years, but we only just now have kind of reconnected, and I'm excited to share your story. And we're going to talk a lot about private capital, and we're going to kind of take a deep dive into that today. But first, I would love to learn a little bit more about you and some of your background before we kick it off.
Sure. Well, first of all, it's great to be here. It's great seeing you. Last time we saw each other was over 15 years ago, before the subprime implosion.
Was it that long ago? Really?
Yeah.
Was it 2006?
2006, 7? Right when you were starting Pitbull. Yeah, Pitbull was just kind of getting to full swing. So yeah, good job on all that.
Oh, well, thanks.
So a little about myself. I would say I've been in the private capital market most of my life, over 30 years. I started right out of college, fixing and flipping homes, and I needed money, so I was borrowing money from private investors that I met, and then I started brokering money for them, and then I started a business doing fractionalized deeds and formalized that business. And then I got married, moved back to Hawaii, got into banking for 10 years.
Right.
So that kind of threw me for a loop, but it was great. Banking is a great industry to learn a lot about everything, right? Just learn all about how credit works, securitization, syndication, just the bigger picture of credit, because private capital, when I was doing it, was just one-off investors in a very tiny microcosm, not really understanding how the broader universe works and how all the pieces work together, you know?
Yeah.
Got into retail mortgage banking by accident with a private client of mine that wanted me to help him build a private capital fund, which he first told me he wanted me to turn his retail operation around first. And that's where we met. I think you came to our office and we're offering some training to our guys. And then subprime hit us, right? So we were at the peak of doing great, and then subprime rolled in, and the whole world changed. And that was also, a really interesting time in my life. Very difficult time. But you sometimes need those types of events and moments to get a better understanding of how quickly the world can change.
Right.
You have these certainties and how you think things are going to be, and you have absolutely no idea when people say things can change dramatically. It's unfathomable, right? So living through an unfathomable event like that gives you a little bit more caution when you're doing things, and hubris is something you become very well aware of. So getting through that, you sort of had to reinvent, right? And I knew that private capital was going to be the place to be again, because there was no money anywhere.
Right.
And when subprime showed up, it kind of wiped out private capital. There wasn't a lot. It kind of replaced it. And so for many years, it sort of disappeared. And so I left Hawaii, where I was initially from and working and had established business, and came back to Washington, where I went to school.
Yep.
And where I started my real estate career and early on, and I knew the opportunity was coming. So that's essentially what we did. I came back here and started pushing private capital again, begging people to borrow money, buying properties from banks. I mean, it was a very interesting experience. And over the many years, just continue to do that, continue to manage money for other investors and deploy their capital and guard it, protect it, and lend it out safely. And then it's kind of where it got me here today with 1892 Capital Partners and the Corliss family. So this is where my journey is sort of ended right now, or sort of say new beginning.
That's amazing. If we could take us back now real quick, I don't want to camp out at 2008 too long
Yeah.
here, but if
I
you,
like to forget it, but
but I think there's so much learning lessons, and you brought it up. I mean, there's so much. Sometimes we have to go through stuff. We got to go through the crap, if you will, to get to the other side. And there is a quote that I heard the other day that hit me hard. It said, "Never trust an entrepreneur who doesn't walk with a limp." And I guess we could switch that and say, never trust.
That's a great
Right?
way of saying, yeah.
Never trust a private lender who doesn't walk with a limp.
Yeah.
And the private lenders, the fund managers of today that I trust the most are the ones that have gone through 2008, 9, 10, and they come out stronger because it wiped out the majority of people in the industry, right? And the ones that endured it, it shows a lot of character and it shows a lot of grit and perseverance and such. Is there anything that you learned? I mean, I'm sure that there's a whole bunch of things, but anything that stands out from that time frame that it sucked, but that you learned from and it helped you?
Yeah, I learned basically, again, you have to try to anticipate the worst. I mean, you can't build a business. A perfect example is this interest rate hike over the past 2 years, right?
Yep.
It's another example of you can't build a business around a 1% event. You can't model. If you had modeled that, you wouldn't have gone into business, right? So
that's good.
You just have to. What I learned is there's certain things outside your control that can have a dramatic impact, and you just need to be nimble. Like you said, you have to have grit. You need to be nimble. You got to be willing to roll your sleeves up. You can't give up. You got to persevere. First person who gets back on the horse wins. And yeah, it was a tough time for me. It was 2008 had me down for a while. I had to reinvent entirely and start over again.
Yeah.
But yeah, it's a good lesson, and I like your quote because honestly, there are a whole new breed of lenders and fund managers that have arisen through this time where you could drop a dime, pick up a dollar.
Absolutely.
And I think this interest rate environment has sort of cleared some of that out. And so I think we were coming out of this stronger. I think private capital is now more mature and more prepared. Those that were able to adapted, and those that couldn't are either still adapting and still trying to make it through because we're still not through it. We're definitely still not through it. But it's still a very exciting time, and the market still continues to grow even in spite of what's happened.
Can you tell us about? Yeah, that's great. Can you tell us about your company? Is it 1892, right?
Yeah, 1892 Capital Partners.
Yeah,
I like to call it I came out of private wealth management too, and I like to call it a family office. And that it's all the family's capital. It's the Corliss family. They were a fifth generation, sort of a natural resource company that was also heavy in development. Mm-hmm. And about a couple of years ago, they sold the natural resource side and came into a rather large liquidity event and decided to move heavily into real estate. And I had known Eric. I met him 15 years ago and became friends. And a couple of years ago, they asked, so he knew what I did, and we talked for many, many, many years, as long as I've done it. And yeah, about 2 or 3 years ago, they asked me to come on board to build that for them. So I manage, a part of their capital to deploy into this space. And yeah, I love it. I don't have investors to report to. I have the family to report to, which is a great, great family. We're not levered, so I don't have a bank to report to. We don't have to underwrite in any particular way, which I think sets us apart from what's going on out there right now.
Yeah. I guess you answered a lot of the question I had next was, what are some of the differences between what you do and the other, private lenders or hard money lenders or whatever we call them nowadays? What are some of those differences?
I think over the past 3 to 5 years, the market has really matured, especially as it's gone through the interest rate hike. And I think they kind of fall into, maybe, as I look at the animals in the zoo, they kind of fall into different categories, right? what has really happened, I think, over the past maybe 3 to 5 years, is securitization has occurred in our marketplace. And so whenever you have securitization occurring, lenders now you look to your clients, your borrowers, but it creates a different breed that is trying to build something to sell. They're trying to sell a financial product.
Right.
So instead of looking at your borrowers, you're looking at who your buyers are of your paper, and you start needing to underwrite to that.
Mm-hmm.
And then it becomes more of a efficiency type business, technology type business. How quickly can I gain market share? How quickly can I get borrowers? How quickly can I find the ones that fit in this box? How quickly can I generate these products? How quickly can I then sell them? And how can I cut and repeat as fast as possible and gain scale and size and market
rinse
share?
And repeat it, right?
Yeah. And so historically, that's not what, at least in my experience, private capital or hard money has been. Hard money is sort of, it's a little bit more, it's more of artisan lending, let's call it. Every loaf of bread you're making differently. You're adding different things to it.
Right.
I'd say the second level is maybe these, Reg D came out, these placements, they became very popular, these small balance real estate funds. Services started building up around them to help service them, help them raise investment money, help with administration, and they would raise investment money and underwrite to a specific prospectus or fund criteria.
Yep.
I think early on that was a little bit unique, but then that kind of became a little more commoditized too, because as that matures, you then also serve a different master. You focus on your borrowers and you try to see what opportunities are out there, but at the same time, now you're raising investment capital. Although it's not securitization or secondary market, you still have investors, right? And investors, if I'm looking at a bunch of alternative investment vehicles and I start seeing a pattern, then I get more comfortable investing in that pattern than a bunch of strange one-off niche funds. And so I think even if you look at some of these funds, they're also built very similarly. The underwriting is very similar attorneys sold those funds and package deals to other people. And
it's the same docs that they're using.
Right. So it's kind of been commoditized too in a different way, right? And so then there's us, and there's a handful of us who, for whatever reason, maybe been in the business long enough and most established with your investors that allow you great flexibility to underwrite how you want to, and your fund states that. You can lend, own, rent, buy, hold, sell, whatever. You have a range of very flexible underwriting criteria, and for whatever reason, you were able to successfully get that kind of money. The problem is it's really difficult to build a very large business with that model, right? And so we have made a conscious decision to, at least so far, to just use our capital. And so that makes us very artisanish in that we can do anything. We report to nobody, we underwrite to whatever. And so our client base isn't investors, and it's not the secondary market. Our client base, I consider our client base not only borrowers, but the credit market is my client, right? There's this complex ladder of credit that does different things, different assets, different stages of projects, from bridge to land to finished, stabilized to unstabilized to value add, all types, right?
Yeah.
And so our job is to look for those missing rungs, right? To fill the gaps, and they're always moving, they're always shifting, right? And the interest rate increase over the past 2 years caused a major shift in that ladder. It really wrecked some rungs, and so we spend our time trying to fill those gaps if we can.
Right.
But then it requires a depth of breadth and knowledge and ability to look at different types of credit. And fortunately, with our development background, with 5 generations of also asset management and multifamily and self-storage, we bring a broader skill set to be able to look at all different types of deals that other people might not, and other lenders might not be able to take a look at.
Yeah. Okay, good. Then you did a great job in explaining kind of the differences between what private capital is and the typical hard money perceptions out there. So thank you. Now, if we could kind of give a brief overview of the history of private capital? I know that we talked about this a little bit earlier, and just kind of give some context to the listeners of what that looks like historically, because then we can look at what it is today and where we're going with it.
Yeah. So I think private capital has always existed in its most rudimentary form as just private investors. Some guy's got $250,000. He's experienced. He wants to lend to you. It kind of started there, and that's how I started using money, right? And then 2008 happened. Well, should I say subprime wiped a little bit of that out, because I was doing this back in 1993, right? Subprime came in and made it difficult for private capital because it was cheap, easy money, and it was institutional, securitized. When that went away, private capital came back again. And then what I think started happening is capital was looking for a place to capital always looks for a place. It's like a living thing. It's always looking.
Isn't that amazing?
Yeah.
It's the flow of money.
Oh, yeah.
It's always looking for a home.
It's always looking for a high yield, always looking for return. And when 2008 happened and capital pulled back, and then it came out looking again, I think it started recognizing these small Reg D funds and what they were doing and all the money they were making, and they were surprised at the yields that they could achieve. They came into the space, right? They came into the space. I think, banks started lending to these Reg D funds, allowing them to lever. And that continued and continued. So from a borrower's perspective who's looking for private capital, it just really depends what you're looking for, right? If you're looking for fix and flip money, which obviously is very popular now.
Yeah.
There's lots of money out there for that. That's that area that's been securitized and commoditized. And if you can fit in that box, there's quite a bit of it out there. If you fit outside the box and you look for a group like me, right? And then there's debt service coverage ratio loans that now have showed up, right? So if you're looking for the bridge loan, to bridge, to get to conventional financing, to stabilize your property, then there's that to use. And that again there's quite a bit of capital out there for that. If you're a builder and you're one-off doing verticals 1 to 4, there's quite a bit of money there too as well, in vertical money, new construction money. There's not a lot of money in the horizontal side, in horizontal development, and there's not a lot of money. I wouldn't say as much money in land. That's sort of dried up. We play a lot there because we have experience in those areas. What I'm seeing is more bridge money is now available for, say, 3 to 10 million. That group is starting to build right now. The regional banks have been unfortunately impacted by this rate increase. There's a gap forming there.
Sure.
And capital is trying to find, it's flowing into that space right now, and people are raising money to deploy into that, to create these bridges to allow hopefully rates get better and get people back into when the banks lend again at those banks. But you have small, you have the mid, and then you have the really big groups, right? That are doing 20 million and above. And I think you're actually seeing some of the larger institutional money come into that space to fill that gap.
Yeah, we're starting to see that.
Yeah. So I think it really just depends what you're looking for in regards to private. What I do think right now is brokers, when I was back in the day in 2008, brokers were around. There was lots of money. You found different ways to place money. That brokers completely vanished when in 2008. There's only a handful of places to get money. And now I think it's an interesting time for brokers. I think there's good opportunities for them. There's so much money out there, and it's fractured. It's all over the place.
Right.
And so brokers can add a lot of value to help you find money as well.
Yeah. Just to kind of go off topic of the private capital, but what do you think would be a good first couple steps for a new broker to jump into the market?
Like a new broker?
Yeah.
Choose your niche, because I think
that's a great point.
Yeah. Fix and flip, ground up construction, 1 to 4 units, and debt service coverage ratio. There's a business in itself right there. There's quite a few lenders out there that you can place with. Some will white label. some you can sell to,
Yeah.
some you can just broker directly to. So I think that's one. I think then you move into this is what I call this regional banking space, which is 2 to 15 million, maybe 20 million, which are unstabilized properties or stabilized properties. We're talking more commercial or multifamily type projects that requires a different set of expertise, a different set of underwriting ability, a different way to package those loans than you need for fix and flip, ground up, or debt service debt service ratio loans. I think those are more easily packaged than, and they're less nuanced than what can happen in these larger deals that typically banks would play, right? And banks would play in them because they would have banking relationships and other things to offset the nuances that they maybe couldn't mitigate. And now you have to underwrite to them. You have to try to figure out how you're going to, because you don't have for non-depository lenders, you don't have a big pile of money that you have sitting with you all the time, right?
Yeah, for sure.
And then you can broker to the big guys. Builders Capital is an example. They 20 million above. They love those big development deals.
Right.
They're willing. You can broker to them, but the higher you go, the more difficult your underwriting becomes, and the harder to land those deals because there's less. You can get competitive in points and pricing and trying to hold on to your client. And I call it white whale hunting. I used to do that when I was younger because it was exciting.
Yeah.
But you miss or something goes wrong, you don't know when next one's going to come around. So it's a little dangerous, but.
Yeah, for sure. Are you talking about the much bigger?
The 20 million,
deals?
Because you'll have clients that will try to circumvent the fees are large enough where sometimes clients will circumvent you, or somebody will cut in line for it, or something happens and you don't have a lot of clients get fickle, at that level as well, because there's a lot of money involved, right? So it's a bit different. I think there's a really good added value component in the 3 to 20, and there's a really good added value component for brokers in the debt service fix and flip, because those people often need some coaching. They need the help, right?
Yep.
The 3 to 20 of those clients realize that you add a lot of value in packaging it to get it, and they don't have the resources to do that, right? You get to really big clients. Sometimes they have someone whose job is to go find cheap money, and so it's just the animals are just so different.
Yeah, for sure. Yeah. For sure. What I've noticed over the years is that you have certain people that will go after just the big elephant, if you will, the big whale. And I think what I've seen over the years, and it's been a kind of a theme really, is that they're always chasing that big elephant, and they never really land the deal. And I don't know if I'm cautious to say it's an addiction, but there's an adrenaline, chasing the big deal. There's a lot. It's a different type of existence. For sure. Yeah. No, I'm all for going after it though, right? Yeah.
It's hard not to sometimes, but I've learned not to. I've learned. Oh. Yeah, that's one thing I've learned over the years: stay in your lane, know what you're good at.
Right.
And even though sometimes it feels like it's boring, you want to do something else, I've come to find I'm good at it. So that's why it's kind of boring. It's not that as challenging anymore.
Sure.
But it's still a very valuable skill set, you know, and I shouldn't discount it. And again, shiny object syndrome. I try to, but I love to learn new things. That's danger, right? You want to try new things and you get attracted to those new things. But, I think successful people understand what they're good at. And they try to stay there, and you're cautious to take risks. Yeah.
That's a great point. Yeah, that's a great point. I mean, I've also heard it said that if we were hunters and you're hunting for, squirrels, I think it's a squirrels, zebras or elephants. So, I don't know if you've heard this before, right? But you can't always
example.
You can't always hunting for the elephants, because you still have to eat. You still have to bring in the squirrels an
elephant can hurt you. You go hunt an elephant,
I'll tell you,
you get hurt, right?
You are in trouble if you miss that shot.
Yeah, I'm all about a deer here and there. I always, back in the heyday when things got really, always just go for singles. Just go for singles. If you can hit singles all day long, you'll do great. You'll
Yep.
never foul out. Every once in a while, you hit a single, triple, maybe a home run, but that's just because you hit it right, just timing wise. And take
Yeah.
those and celebrate. But yeah, try not to get addicted to those.
Yeah. That's why I like your business model. Although you have to kind of understand what you do, but once you understand your business model, it's very, in a way, it's simple to understand. And plus, you're not subject to underwriting guidelines from the end note buyer.
Yep.
You can call your own shots there, and fill those gaps that are unserved right now
Yep.
in the market.
Yeah, it is simple. And I once upon a time, back to the larger crazier deals, I used to think it really fun to find creative ways into a deal, like how can we make this deal work? How can we make this deal work? And I find your best finding a deal that has less points of anytime you have to get creative, you have more points of failure, right?
That's a
Into
great
a deal.
point. Yeah.
So when I
Yep.
go into a deal, I've come to learn that I want as few points of failure as possible. So yeah, I want it simple, and the simpler I can get it,
Yep.
then I like that deal, because you're going to find that when the deal goes wrong, that's when your creativity comes into play. If you've gotten to a deal that's so creative that has all these points of failures, when it goes wrong, there's often very few ways out because it was so hard to get into it,
Yes.
and you have very bad outcomes.
Wow. Very good insight there. Because I think what a lot of people do is they think that that's how you do it. That's how you become successful. Is you have to think so creatively.
To get a piece of real estate to hold on to then to acquire and then maybe hold, I think it's different. But from a lender side, so that's the problem that I did bring that into my lending side early on, because early on I had to figure out creative ways to get into a piece of property.
Right. Yeah.
So yeah, it's useful for certain things, because once you're in, then you got it, and then you figure out a way to make it work.
Yeah.
But on a lending side, it's actually quite different. Yeah.
Yeah. You got to stick to your guardrails that you've set up around your business. You can't just be, let's explore this out of the box deal with you.
Yeah,
I
people
can
might
see where that's
say, creatively, well, their credit is good, or they got cash, or these other things, and so creatively we can mitigate the collateral value or something else. But we're pure hard money.
Yeah.
So in the scheme of private capital, it's at the end of the day, it's collateral value. You could have millions of dollars. I still need to be sure I have that collateral value, because in my experience in 2008, millions of dollars vanish. Bad things happen to great people. And as much as they want to fulfill their promises, they can't. It's not choice. Yeah.
Right. Now, you're one of the pioneering figures, at least regionally. I mean, when it comes to private capital, who else do you remember back in those days that were kind of the other pioneering figures, if you will, in private capital, or this industry that we're talking about?
Yeah, I mean, I can only really talk about my backyard, but it's funny because when I started this back in our, let's say, our region, our South Sound region, when the banks were unloading properties and I was begging people to borrow more money, and I was throwing seminars, begging people. Everybody was just afraid that the sky was going to fall even more.
Yeah.
There's like one or two other guys that I would run into that were doing the same thing. And I made a point to go out and meet them, right? Hey, what?
Yeah.
I run it. My borrower says they borrow from you too. Who are you? What's going on? I got to know them. And one of those friends of mine actually started another very large, sizable fund in this region that he ended up getting out of that as well, though. And some of the funds that didn't try to go really big to stay in the regions, those seem to be around. I mean, we have some old school. We have some Seattle Funding Group's one has been around for a long time up here.
They have,
And they were here back in 93. Yeah, when I was starting, then they've stuck to their guns and they've not tried to become too much or everywhere, and they're yeah, there's a handful of them here.
Yeah.
It
Yeah.
was interesting to watch the big regional or the big national. I think what comes to mind in regards to started as something very small and became very big is the story of Civic, right? That was
Yeah. Yeah. Right. Good point.
that was interesting to watch.
Yeah. Great people out of that
Yeah,
organization.
just
Yeah. Yeah.
banks got a hold of them and things changed, rates changed, they lost, and they just the things that you know bigness isn't always better sometimes.
Yeah. It's not. It's not. One of my business partners out here, Brandon.
Yeah,
Brandon Lau brings up a good point, and his philosophy, and you've heard it before. I think it's that Kaizen type of mentality
yeah,
where it's you just as long as you're improving 1%
yeah,
every day, and we're not trying to hit that grand slam every single day, like you mentioned. To your point, let's hit some singles and doubles. Let's just maybe get on base.
yeah,
Well, then we're in the game a little bit here. Let's hit a
yeah.
ball.
Find your right size. What is your right
Yeah.
size?
Right.
Right size your business. It's like the idea of eating 80% on your plate. Don't overeat
Yeah.
all the time. Just eat your 80% and leave some. Just find your right size.
Yeah. Yeah. No, that's a great point because I overeat a lot. If you put a
I used to
Costco
do that
pizza,
too.
yeah,
Still can't stop. I was
I,
still eating my food when I was a kid. It's still stuck. I can't leave anything on the plate. But yeah,
isn't that amazing? I mean,
yeah,
even now that I'm getting older, you think my appetite would diminish, but I have to. My wife and three girls have to tell me to stop eating. Like, Dad, I think we're done.
yeah. That's
Okay,
too
I didn't
funny.
know I was on my
I'm
fifth.
still eating off her
Yeah.
plate even at the end. So
Yeah. Yeah. So you've been around for a while. So let me ask you this question: as far as like mindset and successful traits and characteristics that make up someone who is successful. So what are some of the traits that you notice successful people have that maybe others just haven't really grasped yet? You know what I mean? Is there anything that kind of stands out to you on that end?
I think you got to be one, surround yourself with good people.
Yeah.
That's
Yeah.
number one. It's um, good people that love to do and do well things that you don't like to do and do poorly. Put it that
Yeah.
way.
Right.
Because then everybody, I used to think that if I didn't like doing it, I was always taught, ingrained in my head, if you're gonna have somebody to do it, you should be willing to do it yourself, right?
Mm.
Problem is, as you build a business, that becomes a weakness because then
Yeah.
you try to do everything, you do things that you're badly, and you still try to do them, and then you feel bad giving them to somebody else because, well, if I wouldn't want to do it, why would they want to do it? And you quickly come to understand sometimes things that you don't like to do, people absolutely love to do it.
Right.
And so building your organization with really good people that fit well that way helps, because work then becomes fun for everybody. Even when I don't like doing things, it's fun for somebody else, so I can hand it off. They love doing it and I'm done doing it, right?
That's such a good statement.
So I
Yeah.
think that's hard to do. It's hard to find those right fits and those right people, and the Corliss family does a really good job. We do personality tests and right job fit tests, and we understand how people will behave if stressed and
Mhm.
how not to respond to that, and more than anything, respond to the problem to relieve the stress so they don't behave in ways that you would expect them to behave if you stress them out. So
Right.
it's
Right.
our job to keep everybody in their flow zone, right? And
Oh
out of
yeah.
that zone that can cause problems for any organization. So it's, I think that's one of them. And just being willing to, and this is hard, but at least what we do and why we're right size and what we do well is just being willing to shift and change constantly.
Yeah. Yeah.
When you
Yep.
become more commoditized and larger and you got to focus on efficiencies, you have to build these inflexible systems. You have to, right? So it's just understanding what you're good at. Yeah.
Yeah.
Building around that.
Gosh, what a good statement you mentioned earlier about surrounding yourself with good people. If you could, what was it again? You said surround yourself with people that love what you hate to do. And hate
that
what
love to do what you hate to do,
love to
and that
do.
what you do poorly, and they do well what you do poorly.
You just pretty much summed up most business books with that statement. That's such a good comment.
Yeah.
I think if I actually uh, really took that to heart, it would change so much of the things I personally do too. I mean,
Well, you end up loving what you do because, knowing that. There's a process of guilt every time I hand something off that I really don't want to do to somebody that I figure they don't want to do it either.
yeah,
I'm unloading on them.
yeah,
I'm
yeah.
burdening them with something and I feel guilty at the same time. And you come to understand, no, that they're here because they love to do that. And
That's their thing.
if they don't have that to do, they're going to be unhappy. And if you have them do what you're doing, they're going to be unhappy. So now when I hand things off, I feel good knowing that the person getting it really wants it, even though I don't want it, right? And that is for me, it was a very liberating feeling.
Yeah, yeah.
To be able
Okay,
to do that. Yeah.
that's really good. And then you mentioned also the shift and change when things are, when things get when changes
For
happen.
us,
When
for our business
yeah,
model, yeah. I
yeah,
mean,
yeah, yeah,
if we're not willing to adapt some if adaptability isn't good for everybody. If you're building a fixed system, you got to lay it out and then execute. If you start changing or adapting on the way, and you've got a big battleship, it actually starts upsetting people because people
yeah.
want to get to a certain point,
Sure.
right? But for us, adaptability is critical. So I think understanding what that unique skill set is needed to make your business efficient and then appropriately using it is maybe something. But
Yeah, yeah. A couple more questions before we wrap it up, and this is a little bit more on the mindset now. It's what books have had the most significant impact on you, either personally or in business?
I used
Or
to be a reader. So far, it doesn't feel like I don't read anything, but I
yeah,
don't.
you
I'm
don't.
always reading the news. I'm always looking at things.
Yeah,
People bring me books all the time that I should read that I just don't get around to it. Um, so embarrassingly, I don't really. I would say the most impactful book for what I do was a book I picked up when I was trying to learn this business back in like 93.
yeah.
Was this big ugly textbook on collateralized mortgage-backed securities.
Nice.
Because
I love it.
I'm lending money or I'm borrowing money from one investor and lending to another,
Yeah, yeah,
it's one-on-one, but seeing the bigger picture of realizing there's a universe that I didn't realize that exists out there. And the universe comes and goes and has done well and died during different credit periods, but
yeah. Right.
it it is happening right now in private capital, the whole securitization. Collateralized mortgage obligate, they're just different types, they're different risks, but life insurance companies are involved. I mean,
Yeah.
so I understand the whole universe and I understand what part I'm playing in it, right? Personal
Yeah.
books, I was going to be a psychology major, so I've read a lot of books just about people and what drives people and
Yeah.
getting along with people and
Yeah. Yeah. That's good.
but realized I probably wasn't make a very good living doing that, so I think I used it in daily life instead.
So we went into finance.
Yeah.
What about do you listen to podcasts? Or I'm assuming you don't if you're not
Again,
reading.
I wish I did. I don't. I barely have time to give them, let alone listen to
Yeah.
them, but I should. People do send some to me, especially on some lending podcasts. I can't remember the name of them though. They're kind of sporadic, but honestly,
Sure.
when I do listen to them, I enjoy them.
Yeah. Yeah.
I do enjoy them.
Yeah.
So
That's
I
good.
should probably make an effort to listen to them more often.
Well, I will definitely post up a lot of the show notes from this podcast
Yeah.
on the site. But where can people? Well, first, what's the website address for your company, and then we'll kind of get into where can
Yeah,
people
our
connect with you.
website is 1892capital.com.
Okay.
And mine is Charles F at 1892capital.com. Anybody interested in wanting to know anything or having a transaction, feel free to email me directly. Yeah, be happy to see what we can do to help.
Yeah, it's great. It's great. I love your guys' business concept. A lot of businesses that I talk with, sometimes they're so big that in order to get somebody on a call, you have to go through a whole array of voicemails and processes, and you got to really work hard at getting in touch with this. So I really appreciate that. You're very easy to talk to, and if people have questions, it's very simple. Just call you up or email you. Simple.
Absolutely.
Yeah. Well, I appreciate this, and I certainly hope to see you at our national conference coming up in September.
It's really great to reconnect with you, Matt. It was it was really, really great to see you, and it's really great to see you doing well. And if anything I can do to help you with what you're doing over there in Hawaii, please let me know.
Yeah, you got to come back home, and we'll go grab.
Well, then now that you mentioned, I am coming back on the 28th to the 12th this month, so maybe I'll reach out to you. We'll grab lunch. Yeah, definitely. I'd love to. So perfect. All right, Charles. All right, thanks, buddy. All right, bye-bye now. Bye-bye.
Thank you for listening. We really appreciate you. Every week, we're bringing you the very best in our space, and I don't want you to miss a beat, especially with the next few episodes coming out. So please subscribe, hit that like button, and we'll talk to you folks next week. Take care.